How's it going, guys? My name is Franca and welcome back to the channel. Today we're going to be discussing the absolute most important cycle of them all when it comes to investing and making money in markets. Now, this is not the Bitcoin 4-year cycle or the stock market. You've heard about like the 7-year cycle. Whilst those are important, today we're going to be looking at the 18.6 year real estate cycle. This is a cycle that not many people know about or have heard about or do not follow very closely. Yet it has been repeated time and time again over the past 200 years. And by the end of this video, we are going to have a roadmap of what is to come based on the 18.6 year cycle and how to best prepare for this in regards to Bitcoin and cryptocurrencies. Now, I know what you guys are thinking, Frank, what the hell is the 18.6 year cycle? I've never heard of this. I don't know what you're talking about. That's why we're here today. We're going to discuss it. We're going to figure out what it is. And let's start off right here, smack bang in the middle of our page here. We've got a rough chart for what the 18.6 year cycle should look like. So what we got here is 7 years up. You generally get a mid-cycle slowdown, which is as shown in the picture here. And then we get another 7 years up, and they often refer to the last 2 years of the cycle as the winner's curse because people get overly bullish and, start, basically flocking into the markets and the housing markets. And then eventually we get our a cyclical peak and crash, and then generally speaking 4 years down. Now, this isn't the exact same every single time. It's not 7 years, 4 years. We've generally seen from 17 years to about 21, 23 years is about how long the 18.6 year cycle takes, but 18.6 years is just the average. Now, if you wanted to look into this far deeper than just the chart, we're just going to be using this chart today that's on the middle of the screen for beginners, and because it's simple and you don't need to know the nitty gritty to basically understand the time frames. But if you wanted to get into the nitty gritty, this book, The Secret Life of Real Estate and Banking by, I don't know if it's going to focus, by Philip J. Anderson. This book is absolutely fantastic. It goes through the last 200 years of American real estate and the cycles, and it kind of just points out every single boom, every single bust, and how they generally last 18.6 years. Whilst the book heavily focuses on the American real estate cycle, it's important to note that it is extremely similar across all Western and developed nations, especially because America is basically the leader in the global economy. So anything that happens in America is pretty well going to have the same effect, especially, in the UK, Australia, any of those major trading partners, huge effects, huge ramifications now, and it's pretty well the same in every single country. Now, the 18.6 year cycle obviously isn't going to be perfect everywhere. There might be a few examples of where housing prices didn't crash and stuff. There's a good example of like Western Australia, where they had the big mining boom during the GFC and housing prices actually didn't decrease because of the huge mining boom. Now, of course, that's a very one-off event, but that's a possibility. But of course, we're talking in general here, not overly specific, but in general, how the 18.6 year cycle will work. So we can see here that we've got just a few examples of the 18.6 year cycle in action, the highest ones being the oldest and the newest ones being the most recent. So the most recent and obvious one is the GFC low in 2011. Or we should probably start at 2001 is kind of the most recent cycle, where we had the 2001 slowdown, and then all turned good. And we had the big, huge boom into the GFC in 2007, which led to about 3 or 4 years down, 2010, and then the start of the new cycle in 2011. And you can see this repeat time and time again. 93 was the bottom. They've got this a little bit backwards, so 97 was the low, and then 81 was the mid-cycle slowdown, 89 the peak, 93 the bottom. And you can see it again, so 55 was the low, 61 was the mid-cycle slowdown, 72 was the peak, and 75 was the absolute bottom. And you can see how this thing just kind of repeats time and time again. And you can go through the Secret Life of Banking and Real Estate book and go through and see all these different cycles and how they repeat time and time again, despite, external factors like inflation, recessions, you name it. The only thing that's really ever affected this cycle has been world wars, which, some people could argue could be about to happen, but assuming it doesn't happen, this will continue to go forward. So how is this faring up with current markets today? Is the 18.6 year cycle continuing? Well, if we look back to the bottom, which was 2011, the GFC, and what's happened since then is we've had our 7 years up, our 7 recovery years, into about 2018, 2019, where we got the mid-cycle slowdown. Now, of course, that was due to COVID, you could say, but it still occurred nonetheless. And then after that, we got basically our breakout, and we've continued up ever since COVID. And eventually, so 7 years from 2018, it'll take us to roughly, well, we're assuming late 2025, early 2026. So is this on par to peak in 2025, 2026? So let's have a look at a tweet from Michael Pizzino, because this is apparently the only place I can find the housing market data, because it's really hard to find for some reason. But basically, you can see here, if we expand this out, you can see here that we had our first swing low, or lower top, and then eventually housing markets decreased slightly. But ever since about September, August of 2022, housing prices have continued up. And you can see that they are accelerating at the price they are increasing. Now, of course, this is just Australia. This doesn't represent every single place on earth. There's going to be places that are decreasing, places that are increasing. But on average, in Australia in particular, and mostly around the world, we've seen it everywhere, just about, housing prices are starting to increase again. The interest rates have risen. Everyone knows what's going on now. Prices are continuing to go up. And they will likely continue to go up until 2025, 2026. Now, of course, it's hard to say exactly when, but we're guessing around that time frame. And until something changes, like a lower swing top, we're basically expecting to continue to rise. So despite recession fears, inflation fears, World War III fears, you name it, housing prices have continued to rise and are continuing to rise as right now, probably as we speak. Now, that's all well and good, but how can we act upon this? How is this changing our Bitcoin trading plans? How is this affecting our stock trading plans? What effect does this really have on the markets? Now, if we think about real estate as basically the base of all markets, essentially, in the economy, if real estate is going really strong, then generally everything else is going strong. Gains from real estate will trickle down into other asset classes. Gains from real estate will go into stocks, will go into, other things in the economy. Gains from stocks will go into Bitcoin. Gains from Bitcoin will, go down into smaller and smaller asset classes. Basically, if real estate is strong, so are stocks, so are Bitcoin, generally speaking. And now you can see, we'll go on to an S&P 500 chart. You can see that ever since the bottom in the stock market in about 2009, the stock market has continued up, just as housing prices have continued up. Now, of course, stock market doesn't just go vertical. It has times and periods of, slowdowns. You can see here what we were talking about, our mid-cycle slowdown. There are times when the market is a lot weaker, obviously, but generally speaking, so long as real estate is strong, we will expect asset prices to basically just bounce out of these ranges. If in the case where real estate cycles, if real estate was decreasing, let me just quickly clean this up. Just delete that. If we were in this same position here, where the market was slowing down and we created a lower bottom, and real estate prices were decreasing at this period, we would expect stock markets to decrease. But because housing markets, real estate markets, because they're increasing, the price is able to rebound off of that strength. And this is similar in Bitcoin. So if we go onto my Twitter now, hooray, little little shill here if you want to go check me out on Twitter. It's just at Franco_YT. Now, if we have a look at this tweet that I made, it's basically just the 4-year cycle. But basically, okay, Bitcoin doesn't always trend up. You know, you can see there's times, you know, during the red period where Bitcoin decreases. But so long as real estate is strong, so long as stock markets are strong, all of these decreases will just lead to higher or to lower highs, basically. So, you know, Bitcoin runs up, yeah, it has a pullback, but then it runs up again. And yeah, okay, it has a pullback, but then it just runs up again. Now, if this were the case where real estate was decreasing, which Bitcoin has really never seen in its entire lifespan, we could expect Bitcoin to, you know, form some lower highs. You know, maybe it comes up, and when real estate prices start to decrease, we could see some lower and lower lows, which would be terrible, of course, for, you know, any Bitcoin holders, but that's just how things work. If real estate is strong, stocks are strong, Bitcoin is strong. Now, the next idea that I want you guys to kind of understand is that there is cycles within cycles and how we can use this to help our trading, basically. So, big assets like the housing markets will have long cycles, long drawn out cycles, less gains as in a terms of a percentage, but of course less decreases in terms of a percentage. You know, you've never seen housing prices drop 90% like Bitcoin has, or at least I haven't. Maybe it's happened once or twice, but it doesn't really happen. And you can see here, we've got this little chart thing. I don't even know where it's from, but I've seen it around. And it kind of has a look at this idea of cycles within cycles, in my opinion, where you've got big cycles, you know, big triangles is what I like to think about. And then you got little triangles within it, cycles within cycles. And this is basically what is happening within Bitcoin and real estate. Yes, real estate has got this big cycle where it's going up and up and up. But within that, within other asset classes, things like Bitcoin, they have their own little cycles going on. And all of these will eventually converge. And that's what we're going to look at now. Because as we said, if we were to extend out the 18.6 year cycle, we would kind of expect that 2025, 2026 timeframe from top to bottom. Now, if we extend out the Bitcoin 4-year cycle, where does it take us to? It's hard to tell on this chart because it's not highlighted. It's only Twitter. But if we get our arrow and come down roughly, we go to just before 2026. What did we say? Late 2025, early 2026. Now this, it seems almost too simple, too easy to be true that you know, just following these two simple cycles, that Bitcoin and housing markets are going to peak at the same time. And if we also extend this to the stock market, where we've spoken roughly about the 7-year stock market cycle, and you know, if we look at that 2018, 2019 slowdown period that we got, and that 7 years from there takes us perfectly to, you know, 2026, it's all converging. And what we're seeing here is that cycles within cycles, and they're all going to meet up like the Avengers, you know, in Infinity War, where they all met up and teamed up to make the greatest battle of all time. That's a pretty terrible analogy, but you can see what I'm saying, where basically we've got the 18.6 year cycle, where we're going to see the peak of real estate markets. You know, the 7-year cycle that we often see in stock markets is looking like it's going to peak as well later into the, you know, the decade, or at the halfway point, basically. And the Bitcoin 4-year cycle is also on target to meet its end in 2026. Now, I know this was a lot of information to take in. We've spoken about all these different cycles that are coming to an end potentially, and we've spoken about cycles within cycles, and it's kind of interesting how it all works out, right? How basically all these cycles that are within one another, and the overarching cycle of real estate is all gonna, you know, spearhead into early 2026, and that's probably going to be the time to get out of markets. And it's also funny just to look at this this little chart that we got here. I remember reading this a long time ago, and you can see 2026 here as years of good times, high prices, and the time to sell stocks and values of all kinds. Now, take what you want from that, but things seem to be converging, and people are not seeing it. That's the big part. People are not seeing it. Twitter is still filled with macro bears, people calling for, you know, lower highs and lower lows, and you know that this is just a sucker's rally. But it seems to me like it's really a disbelief rally. People are, you know, shocked at what is happening. And the big one to look at is the real estate cycle. As we said, if real estate is increasing, stocks will increase, Bitcoin will increase. And whilst everyone is calling for, you know, these huge crashes in the market, if real estate is continuing to increase, there's no chance it's going to happen. It's extremely unlikely. We're continuing to produce higher lows and higher highs, and real estate is not likely to stop increasing for a few more years. So do what you want with this information. I think I've laid it out kind of clearly. I can't tell you guys what to do, but I know what I'm doing personally. Anyways, thank you all for watching so much. I would highly suggest reading The Secret Life of Banking and Real Estate. I read it maybe a year or two ago for the first time, and you know, the way Philip J. Anderson put it, it puts a lot of peace of mind. You know, when you're trading, in my opinion, a far larger time frame, you know, compared to people who are day traders and having to analyze the markets day in, day out. You know, if you're just looking at real estate cycles, it's a lot more simple. It's a lot longer time frame. It's not that day-to-day grind. It's really just about setting yourself up to fit within the cycles, which is a lot simpler in my opinion. And it's a good read. He's a really good author. He writes well. So if you're interested, I'll leave a link down below, I suppose. I'll also leave a link down below for my Twitter, which we could see here. I do post the occasional tweet, and you can see I've just got this one here. Just the 4-year cycle is continuing well. That was all I think I wrote. Yeah, is it really this simple for Bitcoin? Apparently, it's continuing to do so. Bitcoin 4-year cycle seems to be continuing. So take what you want from that. I think it's so far so true, unless, you know, something happens to prove me otherwise. If so, so be it. Anyways, if you did enjoy, thank you for watching. Like and subscribe. I've also got some referral codes down below. Feel free to check them out to get some free money, basically, on exchanges and different stuff. I'll see you guys in the next one.